Welcome back to The Ticker. I'm Shauna Smith. Let's give you a quick recap of what we've covered in the show so far today. Our first ticker, Netflix, now the streaming giant, is tanking after its second quarter earnings. Its number of U.S. subscribers declining for the first time in nearly a decade. Netflix is partially blaming price increases for the decline, and you can see shares off over 10%. The second stock, Morgan Stanley, it topped the second quarter earnings estimates on both the top and bottom line, but it also reported that trading revenue fell 12% compared to a year ago, along with a 10% quarterly profit decline. The stock, though, still trading to the upside, up just around 1%. Our third ticker, IBM, now it beat earnings expectations in its latest quarter, but its total revenue fell for the fourth consecutive time. Revenue from its all-important cloud division grew by 5%, but still lags far behind rivals like Microsoft. Checking in on the closing price of oil. Now, this comes after Iran says that it seized an unidentified oil tanker, accusing 12 people of smuggling 1 million liters of fuel. This is according to Iranian state media. Now, the incident occurred in the highly trafficked Strait of Hormuz, a critical gateway, for the oil industry. But in the wake of this incident, there's a new report just out from The Guardian. Now, this says that Iran has made a substantial nuclear offer in return for the U.S. lifting sanctions. Here to break all this down and what this means for energy is Alan Nuckman, Chief Market Strategist at Agora Financial. And Alan, what was interesting here was when we first got that report of Iran seizing a foreign oil tanker, we didn't really see much reaction in the oil markets. Why do you think that is?
That's interesting in the fact that it's sometimes more telling when something doesn't happen as opposed to when it does. You would have thought that would have firmed the oil market up. It certainly did not. The oil market has come back down to this 55 level. I try and make it very simple. Oil had traded between 50 and 55 for 3 weeks in July. When it broke out, that targeted a $5 move to 60. So that happened. Since that time, we've been just kind of pivoting around this 60 level up here and saw some profit taking this week. And now today we've come back down to that breakout as markets often do. Now, as we came on the air, we saw oil firm up maybe about $1 here this morning, here right now. So it's interesting. You're getting some kind of muted price action in the marketplace. I think it's more impacted by price, the movement, than a lot of these geopolitics that you would think would have a major impact, but really don't.
Yeah, it's interesting. The geopolitical risk has kind of taken a backseat, it almost seems like, to more of the demand story here going forward.
Right, and that comes and goes, ebbs and flows as we sort out, what we think is going to happen in the global growth, of the growth in the global economy. So that's really the issue. That comes and goes, and crude oil, if you look at it, has really lagged behind the overall macro market. So it still has a lot more catch up to do. And that 60 level was an important pivot, and now it's back below that here in the short term. But we could get into the dollar. I know in the last segment you talked at length about interest rates.
Yeah.
The odds of there being a 0.5% cut have actually firmed up. It's firmed up from 5%, where it was about last week at this time, to now about 40%. So maybe that presidential pressure can force their hand, and if that happens, that means more dollars, the dollar gets weaker, and that's actually the end game because that helps U.S. manufacturers.
That's interesting there, Alan. Real quick, just in terms of your prediction for the price of crude, though, going forward, I know you were saying that we're moving these like $5 increments. We were first trading between 50 and 55, then we got up to 55 to 60. Now that we're back to that 55 level, where do you think the likely trade is next?
Well, from a trading standpoint, I'd be leaning on this 55 level as kind of a floor. If from a risk-reward standpoint, I'm still a buyer. I'm still very bullish on the overall market. So obviously that has to follow through that I'm bullish on crude oil as well, because that's more of an economic indicator than anything else. So I think here at these levels, we're getting very close to an area to lean on, an area to be a buyer. And then I want to see how it attacks that $60 level once again, and that'll kind of determine the next level to focus on.
Alan, just talking about the overall market right now, equity market, we're still in this bull market. We have the S&P, the Dow, the NASDAQ, not too far from their all-time highs. Do you think this upward momentum still has room to run?
Yeah, I'm not smart enough to pick the top of the market, or dumb enough, I should say. So we've been doing this game for 10 years. So unless you're afraid of heights, there's no reason to doubt the overall trend. We've started to get some good earnings numbers. And if you think about it, look at the bank numbers. We had JP Morgan make a $10 billion profit for the quarter. Wells Fargo, $6 billion. Citigroup, $6 billion. We're talking about $1 billion profit for the quarter. So corporations are doing extremely well. Yeah, corporate growth has slowed a bit, but it looks like it's going to pick up next quarter. And our expectations for this quarter are essentially 0 to none. So, I think we'll probably overachieve once again. One indicator that I focus on, we're here in the VIX pit here in Chicago, is volatility. And there is no complacency. We're at 14 in the VIX, which is about 25% above that August high at 10. So it's not, even though the market made new highs, we did not have new lows in the VIX. So there's still more downside in volatility, and that means, to me, more upside, as we've seen every time, for the last 10 years in the S&P and in the overall market to continue to move higher.
All right, Alan Nuckman, thanks so much. Let's get to our next three tickers. Union Pacific going full steam ahead in its second quarter. Apple scoring a major upgrade on optimism for its upcoming 5G iPhone. And eBay shares are popping on better guidance. Well, first, let's get to Union Pacific earnings. Now, the company reported mixed results. A second quarter profit beat the street's estimates, but revenue, though,